Is a recession coming? Economists and stock experts seem to agree that we're about to head into the middle of a recession. But what if we aren't? Is there a company out there that could succeed both in a recession and out of a recession? Well, if we're gonna do this, we're gonna need to go big. So let's buy in bulk with the king of warehouse shopping, Costco. For those of you who've watched my channel for a long time, you know that I positively hate retail, so it might seem kind of weird that I'm coming out and making a video about one of my long-term investments, Costco. But here's the thing. Costco actually is not a retailer. That's right. The profit margins they make on the items they sell are so small so that they can attract people to join and pay membership dues. Costco's profits come from those membership dues and from the profit margins that they get from their own internal brand, their store brand called Kirkland. Costco started its life as a warehouse shopping experience in the 1970s based out of, wait for it, Kirkland, Washington, which is why the in-store brand is called Kirkland. In addition to making the vast majority of its profits from those membership dues, Costco also limits its costs by only carrying a certain number of different SKUs or products in its stores. By keeping its selection small, Costco is able to buy in even bigger bulk, which makes it so that they can buy in deeper discounts and pass those discounts on to shoppers, thus increasing the loyalty of the shoppers. Over the years, in addition to providing a really good shopping experience for retail shoppers, Costco has developed a reputation for being an ESG employer. Costco consistently pays the best wages in the entire industry when it comes to retail, both in terms of starting wages but also in terms of benefits over the long term. Not only does doing this make it really good for Costco's employees, it actually reduces overall costs. It's cheaper for Costco to pay more because there's less turnover, and the less turnover you have in retail, the less time you have to spend training new employees. And this model isn't exclusive to the United States. Costco has stores in Canada and throughout the entire world, in addition to China, where its popularity positively exploded. So let's take a look at Costco's fundamentals. I'll give you a buying plan of what I would do if I didn't currently hold shares in the company, and then we'll go over my own position, where it's come from, and where I plan to go with it in the future. When you take a look at Costco's fundamentals, you can see that it has a price to earnings ratio, or P ratio, of 41.18. As I've said in previous videos, a stock is considered overvalued if it has a PE ratio over 20, and while growth stocks can have a PE ratio of up to 30, anything over 30 is considered overvalued. However, when you're taking a look at Costco, even though it does deserve a premium, its PE ratio is dramatically higher than its competitors. Target only has a PE ratio of 12.13, and even Walmart, which is considered one of the leaders in the space, has a PE ratio of under 30 at 27.82. So when you're looking at Costco, you're not just paying a premium, you're paying a pretty pricey premium. This results in Costco being considered overvalued by all metrics, including Yahoo Finance's own calculations for whether or not a stock is over or undervalued. And while it's important to remember that Costco does deserve the premium because it is best in breed, it's also important to note that this is not a stock that isn't volatile. In other words, Costco will sell off dramatically over time. Costco does pay a dividend of $3.60 per share, and while that is only 0.7% currently, it's important to remember that over its past, Costco is known for paying special dividends. Special dividends are one-offs where a company's made a significant amount of money and returns that money to shareholders in the form of a one-time dividend, and the last time Costco paid a special dividend, it was $10 a share. So these special dividends aren't something to scoff at. In fact, a lot of experts in the space believe that Costco's due to pay another special dividend sometime this year. From here, let's develop a buying plan in Costco, because it's important to remember this stock can move around quite a bit, and we want to plan for all of those contingencies. When you look at Costco on a chart, you can see that this is one of those stocks that definitely moves from the lower left to the upper right. When you're looking at a monthly chart, you can see that it's just been consistent growth ever since 1999 all the way through 2022. Costco hit its all-time high here at $612.27 earlier in 2022, and has pulled back to a low here at $406.51 cents back in May. However, in order to develop a buying plan, I'd like to start with where it was at the low in March of 2020 and draw a Fibonacci retracement from that low to its all-time high. You can see that the Fibonacci retracement does respect certain price levels over the past, as Costco has pulled back to key levels, found support at those levels, and then bounced from there. So the Fibonacci retracement will be what we use to develop buying levels for this stock. In July, you can see that Costco has experienced quite a bit of growth, bouncing from around the 38.2% retracement all the way to where it's trading at the time of this video at about $523. So in this case, in order to find our very first buying opportunity, what I'm going to do is draw a Fibonacci retracement from its low in July to where its high was recently to figure out where we might find levels. And you can see that a first place might be this 50% point right around $504.31. Going back in the past, you can see that that key level has provided key support in the past at $501.71, but also on this day here at $501.86. So what I would likely do is use $502 or around there as my first buy. So we'll move it to the close of this day and make this our first buy at $503. After that, you can see that the 38.2% retracement down here at $482 has provided support a couple of times in the past, and on this day it actually bounced before that point. So we'll use the open of this day as our next buy here at $483.27. After that, we pull back to the 50% retracement at $441.78, and you can see that it pulled back pretty good here on this day, but it also finds support above it. So I'd probably use the low of this day at $449.14 as my next buy. After that, you can see that we do have a low of 2022 down here at $406.51. However, it does find support above it here, so I probably use the low of this day at $418.72 as my next buy. From here, we zoom out on the chart, and you can see that our next Fibonacci retracement is $376.53. And while there is support around it down here, you can see that it's often found support above it, and I'd probably use the low of this day here at $382.51 as my next buy. From here, I'd use the Fibonacci retracement that we drew from its low in July to its high in July and find support right here at $351.21. And if you look in the past, you can see that this has provided support several times, so I'd probably use the open of this day at $351.45 as my next buy. And from there, we zoom out some more, and you can see that we have a low here on this day at $307, which might be my next buy. If I was going to be more aggressive, which I typically am, I would use the close of the following day because it did find harder support there at $310.92. You can see that we have 8 buys, and the reason for this is that I wouldn't use my typical 50% buy with my initial open in Costco. I'd actually lower that down to 25% and save the remaining 75% to buy in 10% increments as it sells off. If you followed this strategy, by the time it got down to $311, you'd have 95% of your allocation in Costco, and that would leave you with 5% cash that you could apply should Costco actually break through its 2021 low. While I don't think that's likely, I always like keeping cash on the sidelines in case a stock sells off dramatically and leaves me in a situation where I could buy at lower levels than I anticipated. If Costco ends up heading higher before I've bought a full allocation, then what I have is what I have, and I'll let Costco go higher and just see where it goes from there, taking the money that I would have allocated to it and putting it elsewhere. Costco is one of the positions in my pandemic portfolio. The pandemic portfolio was started in May of 2020. I had a lot of money that I needed to put to work, but I didn't want to put it to work in any of the existing portfolios. Instead, I tried to design a portfolio that had a number of different stocks that would perform well in and out of a recession or a pandemic that also had dividend yields, and Costco fit that bill. I made my first buy in Costco on May 12th of 2020 at $306.88. 1 month later, I made my next buy on June 12th at $301.36, which lowered my per share cost to $304.12, a minor reduction of 1.799%. I made my next buy on November 30th of 2020 at $386.89 after Costco announced that it would be paying a special dividend of $10 per share. Seeing as how Costco had exhibited such strength up until that point, I thought that special dividend would provide strength in the stock, so I bought near its all-time all-time high. However, Costco actually exhibited weakness from there, so I decided to add again. My next buy was on January 15th of 2021 at $361.62, which increased my per share cost to $330.36, an increase of 2.964%. And I thought I would be doing well. I thought Costco would be strong. It turned out I was very wrong. Costco hit a low in 2021 of $307. From its high to its low, this represents a sell-off of almost 22%. And this shocked me. I thought Costco would demonstrate a lot more strength, so I stayed hands off when it sold off this much, waiting for it to sell off even more. That didn't end up happening. Costco ended up bouncing from that $307, so when it got to a point where I could take profits, I decided to limit my position a little bit. I made two profit-taking sales, one on May 3rd at $376.70, and another on August 11th at $443.97. The combined sales lowered my per share cost to $250, which was a 20.635% reduction from where it was previously at $330.36. From here, I decided to change my strategy and reduce the amount of quantity I was buying each time I made a buy in Costco. I was pretty excited in 2020 and wanted to build the position pretty quickly, but after seeing exactly how volatile the stock could be, I decided it was time to be a little bit more conservative. Beginning in September of 2021 and proceeding through January of 2022, you can see that I made a number of buys that were higher than my previous sell price. However, by keeping the quantities in check, it also kept my per share cost in check. So even though I did buy multiple times above that last sell price, it ended up raising my per share cost only to $290.50, which still represents a reduction of 5.34% from my initial buy in 2020. In April of 2022, Costco ended up hitting an all-time high at $612.27. And on April 7th, the day that it hit its all-time high, I got lucky and happened to decide to take profits because the position had grown so much in profit that it was time to take some off the table. So I made a pretty sizable sell on April 7th at $603.64, which reduced my per share cost all the way down to $72.90. This was a 74.905% reduction from my last per share cost of $290.50 and represented an overall 76.25% reduction from my initial buy in May of 2020. And my timing couldn't have been luckier, as Costco ended up selling off pretty substantially from April to where we are now in July. As you can see, I made 3 more buys in Costco as it sold off from its all-time high to its low in May of 2022 at $406.51. And since I continued to keep my quantities in check, my last buy was on May 18th of 2022 at $442.12. However, my per share cost is currently $203.92. This represents a reduction of 33.55% from where I initially bought in May 2020 around $304 to $305. From here, my next price target is around $410, slightly above its low and around a key level of psychological support. However, I still have a significant amount of funds that I can allocate to this position should it sell off dramatically from here. However, the bounce it's shown has been very strong, and throughout 2022, Costco has demonstrated that it continues to be an outstanding performer, exceeding expectations and beating the heck out of sales numbers, which makes this the best in breed in retail. I hope this video helped you out. If it did, please hit like and subscribe. To learn more, watch some of my other videos here. Thank you for watching, and I'll see you in the next video.